Welcome to this special episode from IBKR Podcasts. I'm delighted to chat with Richard Dhanpaul, who curates content on YouTube under the mantle of TradingWarz. Welcome, Richard. How are you?
I'm good. Thank you so much for having me. It's a pleasure. I'm excited to have this conversation and just share some of my experience with your audience.
It's great to meet you. For the last 2 years, just for the benefit of the audience, Richard has been independently creating video content to help the IBKR community. So TradingWarz is spelt with a Z at the end, right, Richard?
Yes, sir.
Tell us a little bit about the TradingWarz channel, what it does, and why you started it.
Yeah. So I'm going to go back to the beginning of my story. So coming up in an immigrant family in Toronto, so I was born and raised in Toronto. I was taught that the stock market was, it was a gamble and it was a scam. It was always a lot of fear because of just a lack of understanding. So later on in my career, I became a CPA and I spent time working at the Big Four. And during that time, I got exposed to working in asset management, private equity, and banking. And that's when I really started to understand that, hey, some people do this for a living. And if you can have the right risk parameters involved, and if you can do it professionally, you can make a living off of this. You can make some money off of this. So I started to get really interested during that time. And then when I got interested during that time, I started trading. I started off with options. I didn't do too well in the beginning when I first started off. I was chasing, weeklies like a lot of people do. And I got introduced to the futures market. And that's really where my interactive brokers journey started with futures trading, because it was one of the few brokers that offered futures with great commissions and fast fills. That's what I needed in order to get in and out quickly. And I started trading futures. And from there, when I came over to the United States, I came over and I decided that, hey, I start sharing some ideas, some content. One of my friends said, why not? I was very influenced by Fibonacci trading, and I developed my own style with fibs and my own levels. And just through trial and error and through winning some and losing some trades, I created my own content basically. And that's when I decided to just share my ideas through TradingWarz. And by sharing that, people have caught on, and I share a lot of free picks every day. I actually post free picks. And from there, people have followed me and subscribed to my Twitter, X account, and YouTube. And, now I'm over 118,000 on X and over 36,000 on YouTube. So I'm just grateful for that, grateful for the journey. My main message is for me, it's always focusing on the risk and understanding what's at stake, but also making sure that your reward is always a positive ratio, and not risking 1,000 to make $100, for example. You're never going to be profitable if you have that mentality. But I'm always trying to do doubles or singles or triples if I can. So risking 1,000 to make 2,000, 1,000 to make 3,000. And what I was mentioning earlier, just the win rate. So with the 2-to-1 risk to reward from a mathematical perspective, for every 100 trades, if you win 34, 35 trades, you're still going to walk away with some type of profit. Obviously there's commissions, other things involved, but just on the basic high level. So that's where all my content came from, that passion of the Fibonacci, the math, the risk to reward. And I'm grateful today that I've been able to get so many followers and people following my journey.
So I think I heard earlier that you've written a few books as well.
I have 4 books, and those books are great because it's kind of like a story of my life and where I am in trading. I have the very first Fibonacci book that I wrote, which was more theoretical and more like, this is what I know about Fibonacci. This is what I've done. I love Fibonacci. And then recently, the latest book that I wrote, The Power of the 618 Fibonacci, is actually like my trades, my real trades, my broker statements, some video recordings that I took from my trades, and documenting a journey. So I've refined my entry, refined my stop loss, refined my target. And so the books I write is kind of like my story, my journey, and the people that read it, and they get to see my experience and what I've been through with real trades. So my goal was always to write something that was really me, what I did, because I feel like that's what I wanted when I started reading content and started learning trading. I was like, it's great. You have this strategy. It's great. But walk me through what happened in 2024. What did you do? What were your wins, your losses, your ups, your downs? So that's the content that I try to focus on these days. And my latest book is like that. I'm actually probably going to do a part 2, which is going to be all of my 2024 trades related to futures, and discussing that, the drawdown, the upside, the risk, the reward, and everything like that.
Tell us about the asset classes you trade. You mentioned you started off with options and it was a bit of a failure to begin with, but just go into the asset classes that you do trade now.
Yeah. So right now, my main goal, my main strategy is long-term investing in the key companies I want to hold for the future. It's basically tech, right? And using that capital invested in tech, with a margin account, what I use, I can leverage that cash. It's basically a cash equivalent to trade futures contracts. Futures contracts, I mainly trade the NQ and the ES. I started off with the minis because my account was too small to trade larger contracts. Now I trade larger contracts, full size contracts. And the goal is for me for that is to kind of generate cash flow, because when you're using margin and stuff like that, there's a risk to holding overnight. There's a risk for holding for a long time. So I try to generate 10, 20, 30 points if I can of gains. And I try to risk 5 to 10 points and try to keep this ratio in balance, 2 to 1, 3 to 1, 4 to 1, trying to keep that in balance for my trades. But every single day I'm looking for an ES trade, every single day, because I find that with Fibonacci and my experience, it has a great synergy that I like to trade with. NQ as well, but I feel like NQ from my experience is a lot more volatile. The wicks on NQ can stop you out. They can push you out. So I really try to focus on ES. But NQ, when I'm looking at bigger picture, weekly chart, daily chart, monthly chart, I'm using that tool to be involved. And then I also have my long-term investments, and I'm back into options a few years now. I kind of understand now how to use them better. When's the right time to use them? So for example, with options, I'm always looking for 5 to 10% plus drop on large caps. Like as an example, one of my personal trades, I took Tesla a few weeks back at 336, right? And I'm using that Fibonacci retracement tool. 61.8% Fibonacci is lining up with about a 10% drop in Tesla to buy calls 6 months out. That's one of the things I'm doing now with options. And because I'm using the Fibonacci to allow me to kind of handle the Greeks, I've been doing a lot better with options. So options, I definitely think are a great tool because the capital requirements are a lot different than futures, right? And you don't need a margin account. You can do a cash account. But having the right strategy and the right balance behind it is very important. And you got to know, what are you doing? Are you selling premiums? Are you doing spreads? Are you buying naked calls and puts? There's so many different avenues. So I try to focus on using the fibs to line up with my naked calls or puts. What I put in is what I'm willing to risk. I know that up front. And I know that's my maximum potential loss if I'm just using straight calls as an example.
Okay, you've mentioned Fibonacci's 61.8% a lot. Take us down that rabbit hole. Talk about Fibonacci lines and of retracement and how you use them.
Yeah, so that's a great question. The story of Fibonacci is a mathematical ratio, the golden ratio. It's found in nature. It's found in the universe, outer space. There's these proportions. And trading is human psychology, really. It's human psychology. It's people trading, human trading. Even if it's a robot trading, that robot has roots within, human programming. And because of that natural side of it, when you're looking at human interactions, human relations, psychology, these mathematical ratios, sometimes they show themselves, through the interactions of buying and selling. And what I noticed was personally for me when I'm trading is if I have 61.8% Fibonacci, I break it down into layers. So you have intraday, and you have your swings and your bigger picture. And your intraday, you pull up a 5-minute chart on SPY, and one of the things I do on X, one of the things I do on YouTube is I show these examples every single week. You're going to get at least one good trade. In my opinion, that's what I see. There's always at least one good 61.8. So when you have that, let's say first hour of the day, let's say, the S&P 500 is rallying or it's pulling back. What that 61.8 is, it's a tool to measure the retracement. So if we go from $0 to $10, you take your tool from 0 to 10, your 61.8 is going to line up somewhere in $4, somewhere in that range. You're buying at 4. Okay. So the question is, on the way from 0 to 10, where do you want to buy? That's the question. The Fibonacci tool says, hey, we buy around $4. That's around a 62% deal of the last move. And that's where I fell in love with Fibonacci, because I realized that I'm always getting in lower. I'm getting in lower than the last high. And because of that, I can manage my risk better. So for example, if I buy at 4 and we go to 12, I'm better off than if I bought at 10. My upside is a lot more, and it works really well with options because you're also getting the premium decaying on the way down. So a lot of times when I use conditional orders as an example in Interactive Brokers, as it's coming down, the chart is red, comes into my order, it hits the condition, it fills the option. And if it bounces, I'm already up a little bit of money right away because I'm first to the party. That's the way I like to think about it. There's also the risk that it can just keep going down, right? But generally speaking, from my experience, what I see is we at least hold it a little bit. There's times where you split right through, could be news, could be anything. But at least if I bought at $4, my risk, if it goes back down, is not as much as if I bought at 10. So that's what really got me into it. And every week, every month, seeing these reactions, it really just blew my mind. Like today's an example. I took a Fibonacci trade before I did this call with you guys. And we had a 10-point reaction today on the 61.8 Fibonacci. The last week's low was based on the unemployment data, right? And then we had that low, that anchor, and then the all-time high. If you draw your Fibonacci from low to high, where 61.8 is, you can go look at a chart. There was a reaction there. And those reactions gets me excited because I know I'm on to something. I'm on a level that maybe an institution is, maybe somebody else is on that level. Maybe there's a robot on that level. I don't know, right? But I know that it gives me a good chance to get to the risk to reward ratio that I want to achieve.
What do you think that investors need to be aware of before they start trading futures products and margin requirements?
I mean, margin cuts both ways. It's a great tool to grow your account, and it's a great tool to blow up your account, because if you don't have a stop loss and you're trading futures, you can get margin called once you go below the required balance, right? And futures, for me personally, I always have a stop loss because it's such a highly leveraged instrument that you can't get away with, I bought some calls and they went to zero. You can't get away with that. If the index goes down forever, that's unlikely. But if it does go down forever and you're over leveraged, you're going to get margin called. So it's very important. You got to know your risk. So with futures, the general rule of thumb I tell people is this: risk 5 points to make 10 points. Okay. So if you're doing ES, 5 points is $250. If you're doing MES, it's $25 because $5 per point. And if you have a small account, are you comfortable risking $25? Are you comfortable risking, let's say, $50 a trade? If you're comfortable doing that, if that fits your risk parameters, now you can develop a system. So you can risk 5 points to make 10 points. You can risk 10 points to make 20 points. And you just try to repeat this process over and over again. But it fails when you don't use your stop loss, when you don't take your targets, when you don't have this control. It fails. The math is beautiful on a piece of paper, but you have to have the emotional discipline and you have to have the strategy in order to implement it. So it's a double-edged sword. I have a team, I have a community that keeps me accountable. So I don't do things like that, right? And it's hard when you're by yourself because you always think you can make it back, or you always think you can make more. So you have to get over those psychological hurdles in order to succeed. And you need to have a structured plan.
Can you do this full time yet?
Yeah, no, definitely. That's how I got into this. Was my mentor was doing it full time, and I didn't believe it. I honestly did not believe it because of the background that I came from. I didn't believe it until I seen it. When I saw it, and then I started following the trades, and I started seeing, okay, me and my mentor, we do completely different trades, right? That's what even makes it even more beautiful. Is there's so many ways. Everything is going to work at some point. Nothing works all the time, but at some point it's going to work. Something's going to work. Fibonacci might not work tomorrow. It might work next month. Or, RSI, MACD, double bottom, double top, pennants, whatever patterns. At some point, you're going to have a winner and a loser. And that's why you can do it for a living, because there's always an opportunity. And you just need to really control the risk part of it in order to become profitable. In my opinion, you got to control the risk. And I try to achieve at least a 3-to-1 risk to reward personally for me. My average risk to reward ratio for the year is 4 to 1. So if I'm risking $100, I'm trying to make 400. That's my average based on my data for the year. Let's take it back for a 3-to-1 with 10 trades. Let's say you have 10 trades a week, 10 trades a month, whatever you're doing. Out of those 10 trades, if you have a 3-to-1 risk to reward, you'll only need to win 3 out of 10, right? And the problem is so many people get focused on winning every trade. And when that trade goes wrong against them, they're not willing to accept it. And then they average down, or they don't take the stop loss. And now all of a sudden, that loser that was supposed to be a 5-point loss is a 50-point loss because you were not willing to follow the plan. So once you understand the math behind it, it's a lot easier to do it for a living. It's not for everybody though, because it's a battle with yourself. It's a battle with you pushing the buttons, with you pulling the trigger, with you being disciplined. So you have to be able to develop those skills in order to succeed.
And you mentioned this before we started recording today, but there are tax implications with futures contracts, right?
Yeah, generally speaking, the futures tax is lower than equities. That's one of the things that fascinate me about futures, is it has its own tax code, its own tax section, which was like, well, that's kind of weird. Why is it lower to trade futures? But that's one of the reasons why I got into that also, is for the tax implications. But not only for tax purposes, but overnight trading is so important. Being able to trade after hours of futures. If your stop loss gets triggered, so there's a small break, when the market closes around 4 to about 4:36, then we reopen on futures, right? And then when we reopen, if your stop loss gets triggered, you're protected, right? But let's say you're not able to trade after hours and we gap down. Let's say we gap down tomorrow. and the gap's below your stop loss, now all of a sudden you're losing a lot more than you wanted. So that's one of the main reasons also that I love trading futures, that overnight aspect of being able to, even like on Sunday, futures open at 6 p.m. If you want to get in before Monday, let's say you have your setup, you can do that. So very powerful tool.
Brilliant. Richard, thank you very much for taking the time to join me today on this podcast.
Thank you very much.
And to the audience, don't forget to check out Richard's playlist on YouTube. It's called TradingWarz with a Z at the end. And remember to subscribe to future IBKR episodes wherever you download your podcast from.
Thank you, guys.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Options involve risk and are not suitable for all investors. For more information, read the characteristics and risks of standardized options, or OD, which may be accessed through the link found in the podcast description page. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com. Trading on margin is only for sophisticated investors with high risk tolerance. You may lose more than your initial investment. For additional information regarding margin loan rates, see ibkr.com/interest. The information in this podcast does not constitute tax advice and cannot be used by the recipient or any other taxpayer to avoid penalties under any federal, state, local, or other tax statutes or regulations, or to resolve any tax issue. The projections or other information regarding the likelihood of various investment outcomes generated by the tool mentioned in this podcast are hypothetical in nature, do not reflect actual investment results, and are not guarantees of future results. It is important to understand that these projections are based on certain assumptions and models, and actual outcomes may differ significantly. Please note that results may vary over time.